We are kicking off today's deep dive with a story that cuts right to the heart of the clean energy storage trade. Because when a major Wall Street house upgrades a battery technology name on the back of a commercial agreement with Amazon, the entire sector needs to pay attention. Raymond James has raised its price target on Electrovaya, ticker EVYA, following confirmation of a significant commercial agreement between the two companies. This is not a letter of intent or a pilot program whisper. This is a real deal, and the institutional community is now forced to reprice the risk-reward on a name that many had modeled conservatively going into this catalyst. Raymond James formally raised its price target on EVYA after Electrovaya announced a material commercial agreement with Amazon, one of the world's largest logistics and warehouse operators. The upgrade signals that Raymond James analysts now see accelerated revenue growth and margin expansion as Electrovaya scales production to meet enterprise-grade demand from a hyperscale customer. Prior to this deal, the analyst community had been modeling conservative adoption rates for Electrovaya's iron phosphate battery technology. This Amazon partnership fundamentally changes that assumption, pushing the consensus revenue ramp window across 2026 through 2028 into sharper focus. The 10-year Treasury yield sitting at 4.5% keeps cost of capital scrutiny high for capital-intensive battery manufacturers, making deal validation even more critical. The deeper significance here is the chemistry itself. Amazon's decision to deploy Electrovaya's iron phosphate battery technology, rather than conventional lithium chemistries, is a meaningful signal about where enterprise-grade energy storage is heading for demanding warehouse and logistics applications. Iron phosphate cells offer superior thermal stability and cycle life, which matters enormously in high-utilization fulfillment environments where uptime is non-negotiable. When a company with Amazon's engineering rigor and procurement discipline selects a specific chemistry at commercial scale, it tells competing operators and fleet managers that the technology has cleared a very high bar. This is not a marketing win. It is a supply chain and engineering validation that could shift competitive dynamics across the sector for years to come. The primary beneficiary is obviously EVYA itself, where the Raymond James upgrade combined with execution on the Amazon ramp should drive out performance relative to sector peers. But the read-through extends well beyond a single name. Plug Power trades in the same speculative clean energy infrastructure bucket and tends to move sympathetically on large deal validation stories like this one. ENPH Energy benefits indirectly because storage infrastructure enablement accelerates solar plus storage bundle economics. Solid Power faces a competitive dynamic question mark given Amazon's iron phosphate preference over solid-state alternatives in certain applications. And the Clean Energy ETF ICLN functions as your sector barometer. Watch it for confirmation that institutional flows are rotating into the storage complex broadly rather than staying concentrated in EVYA alone. The upgrade is the catalyst, but execution is the story over the coming quarters. The single most important metric investors need from Electrovaya is the revenue contribution from the Amazon contract, specifically when it begins flowing through the income statement at scale and what the gross margin profile looks like at commercial volumes versus pilot pricing. Watch ICLN for sector trend confirmation, because a sustained breakout in the clean energy ETF would signal that institutional money is moving into storage infrastructure as a theme rather than chasing a single deal. Macro context matters too. The 10-year yield at 4.5% suggests a market that is broadly calm but cost of capital sensitive, meaning any execution delay would be punished quickly and without mercy by the tape. The bottom line is straightforward. The Raymond James upgrade on EVYA backed by an Amazon commercial agreement is the most concrete validation catalyst the battery storage sector has seen in this cycle. Electrovaya is no longer a speculative technology story. It is a commercial-scale supplier with a hyperscale anchor customer, and that re-rating is real. Accumulate EVYA on any pullback, but keep your position sizing disciplined because execution risk on the contract ramp remains the key variable through the coming quarters. Broader clean energy names including ICLN, Plug Power, and ENPH Energy deserve a place on your watch list as secondary beneficiaries. That is the one story that matters today. The full breakdown is right here. If this level of analysis helps you cut through the noise and trade with more conviction, hit subscribe right now and tap the notification bell so you never miss our daily market deep dives. Every session we break down the stories that actually move money, with the specific numbers, tickers, and levels you need to act. No fluff, no filler, just the market intel that matters. See you tomorrow.